Hello everyone, now I'm gonna tell you how I did my final project on subject 332. In the final report, I answered question 2, 3 and 4. For the second question, I worked on an event-driven trading strategy. First, I choose a geopolitical event because such events usually affect energy prices and financial markets. Then I collected 10 years of daily data such as ExxonMobil stock price, S&P 500 index as the market, and the US 10-year Treasury yield as a risk-free rate. After that, I calculated daily returns for both the stock and the market. Then I used the kappa model to estimate expected returns. So after that, I calculated AR, abnormal return, which is actual return minus expected return. Then I summed abnormal returns over the event period to get cumulative abnormal return, or CAR. My results showed that around the event, ExxonMobil had a positive abnormal returns, which means the stock performed better than expected. This makes sense because energy companies usually benefit from geopolitical tensions. Then I also checked risk shifting using a regression with dummy variables. This helped me understand whether the relationships between the stock and the market changed during the event. This results suggests that during the event, the behavior of the stock was different compared to normal periods. Finally, I proposed a trading idea. Before the event, monitor the market, during the event go long energy stocks, and after the event hold for short-term profit. I also discussed market issues like slippage, market impact, and information asymmetry, which can affect real trading. For a third question, I analyzed the buy-right strategy, also known as a covered call. This strategy means buying a stock and selling call options on the stock. The goal is to earn extra income from option premium. I selected several stocks like Apple, Microsoft, Tesla, ExxonMobil, JP Morgan, and also indices like S&P 500 and Nasdaq. Then I compared normal stock return and buy-right return. The difference is that in the buy-right strategy, I add the option premium to the return. The results showed that in my examples, the buy-right strategy gave higher returns than just holding stocks. This is because premium provides extra income. However, there is a limitation. If the stock price increases a lot, the profit is capped. So, this strategy works best in volatile or slightly growing markets, but not when the markets grow very strongly. For the fourth question, I created a bond portfolio. I selected US Treasury 2 years bond, US Treasury 10 years bond, and the corporate bond. Then I calculated Macaulay duration, modified duration, and convexity. These measures help me to understand how sensitive bonds prices are to interest rate changes. In the macroeconomic part, I explained that in 2026 there is geopolitical uncertainty, inflation pressure, and central banks are cautious. So the question was whether it is too late to invest in bonds. My answer is that it's not too late, but investors must be careful. Bond investing now requires good duration management, diversification, and an active strategy. I also discussed risks like interest rate risk and credit risk. Finally, I reflected on my trading performance. I analyzed with a good strategy, mistakes can happen, such as overtrading or poor risk management and lack of diversification. So the main lesson is that having a good idea is not enough, and risk management is very important. Overall, this project helped me understand how markets react to events, how trading strategies work, and how to manage financial risks. Thank you for your attention.